Hello everyone, hope we're all doing well. So it has been a while without us talking about synthetic indices, and most of you have been asking about it in the comment section and also in our emails and messages. So let's take a breakdown in at one of the synthetic indices, that is Volatility 75. This is one of the most traded. Now, the last time we spoke about, let me just clear all this actually. Just clear this. The last time we spoke about actually V75 was here when the market had just made this red candle here. And we said that we wanted, since due to this weak momentum upwards, we wanted it to actually first come back down. And we had talked about it being in this range here so that we can, those who wanted to trade could actually utilize this range here. That was the last time we talked about it. Now, let's make an update. VIX 75 is not yet out of this range, but there's a higher chance it would get out of the range. Why? Because we do have lower low, lower high, lower low, lower high, lower low. The market came and tested this lower low, and now it's failing to continue down. The market is telling us that, hey, I'm not interested in continuing down. It could still continue down if it fails to take out this, but the moment we take out this area here, it means that we shall now be starting a new journey, right? So monthly, we're still here, but there are higher chances that we could push up because the market is communicating, I'm tired of going down. When you drop down to the weekly time frame, what do we actually spot on the weekly time frame? I've spoken this actually in all the breakdowns of V75. I hope you guys can utilize it. Now, if you look at this, this is an impulsive move. Why is that an impulse? We have broken this turning point, this one, and also above this turning point here. Then also observe this momentum upwards impulse, but look at this movement here. All these movements are not taking out these two candles. So this is a weak momentum downwards. There's a higher chance of us continuing higher, but we do not guess the markets. This is just giving a bigger picture. Now, let's mark our territories. I'll start with the Fibonacci. We have an impulse here from down here up to up here. What do we have? We said in the topic of Fibonacci, I'm just going to attach it. In the topic of Fibonacci, we said that the moment 61 is taken out, we shall be changing trend. Now, I want you to observe what the market did. The market came, touched 61, it failed. Came back, touched it, failed. Came back, touched it, failed. Made a false breakout, broke back up. Then it attempted, this is now what those people trade, what is it called, SMC and I think SMC is, I think, smart money concepts, yeah. They call this liquidity, but for us who trade market structure, we call it, this was a false breakout, so the market had to come and test this again. Eh? That's the same concept there. Here, there's a part of, they will call it liquidity, but for us, we shall just take it as a false breakout, so the market needs to come and test this. So it happened here, and then we expected the market to go upward. That's what the market is doing. Now, what is currently happening is the market is approaching, there's a structure the market gave us here, so we shall be, which is aligning with this resistance here. It's aligning, this is a very sensitive area. The market was rejected here. It came back, retested it, reacted, broke down, came back, reacted on it, came back, reacted on it, came back down, even here it reacted on it. So what we want the market strongly break above this area on a weak retest, then we can be able to take it, to take our trade. You know, if you want to swing, remember we said swing as our structure is gotten from weekly, but so far you've clearly seen, this. This is a very strong level of support. Now that is one. Secondly, the market is creating a W. It's not yet a W. Remember the week of synthetics closes on Saturday, right? It's not yet a W, but we want the market to continue pushing up and closes at least above this candle here. Please let it close above this candle. If then close above that candle, there are higher chances it could come back down to keep into this consolidation. Remember, we're in a consolidation. So what do we want it to do? We want it to close above this green candle. Then we shall have a pullback and a push up. It can either make a double top. Let me just repeat these rules. When the market makes a W, like how the market is creating it here, and the neckline is broken, we shall expect a pullback to the neckline. This is what we shall expect. If it closes above here, we shall expect a pullback to the neckline. That is one. Secondly, what is the outcome after that? We can either expect double top to come, the market to come and make double tops, or if there's a structure here, the market can actually make a lower high, or the market can make a higher high. So these are the outcomes we expect here: double top, or lower high, or actually even a higher high, right? So this means that monthly and weekly are communicating the same thing, right? So let's check daily, those who trade using the daily time frame. Now daily, we do have a clear structure that is creating. For it daily, as well, they showed us that we have broken this structure here, and the higher chances we could expect just the market to give us a pullback, and then we can, depending on the structure created here in the entry time frames, we could either have double tops, lower high, or we could even have a higher high, right? Those are the outcomes of a W. So we have a big W here created, plus even an impulse, because we're breaking this turning point, breaking this one. If also we break this one by end of today to align with weekly, then we could use the Fibonacci retracement tool to give us a proper confluence. So with all the 3 time frames that we have seen, monthly, weekly, and daily, I don't mind which time frame you use but all of them are telling us that even if we're in a range, at least your advantage should be in a buy. Do not start forcing a market to trade opposite the trend of the market, right? Most of us try to force that and we tend to lose a lot of money. We have been trading our volatilities in our private group and we have been catching most of these moves. But with the knowledge we have given, it's the same knowledge that we are using. It's not different. Just that there were a number of people and maybe the confidence levels are more, but it's the same knowledge that we're using. There's nothing much special there. So make sure you guys just stick to the rules that we share with you guys here, and everything will be okay. So let's go to the entry time frames a bit, having marked these levels here. So you can mark this area here, right? I can't draw a Fibonacci retracement tool right now, but when an opposite candle comes, you can be able to use that. So we have these levels. You can take your trade from either here or here, depending where the market changes trend from, which is aligning perfectly with that of weekly. You can see it's aligning with the neckline of weekly. This area here, if you want, you can make it bigger, this area here in weekly. But when you go to daily, it's showing us that this is the area. You can see it was a resistance here, resistance here, resistance here. Though I'm just going to reduce the size of the, of this. So I'll just expect when the market closes above this area here, there are 2 movements that we expect. The market could give us a pullback into this area or even a deeper one to pick more liquidity into this level here, and then we can continue upward. So here it's up to you to decide and know that either you, not me, but either you are a retracement trader or you're a continuation trader. Now, I usually advise this in the recent videos that if you are a beginner or you're not very familiar with the market, do not trade reversals or retracements. I really advise that if you're still new to the markets, please trade continuations in the market. Why am I saying continuations? Because the market currently has just broken these structures. Wait for it to, actually the best is for it to close above here today, then we shall have the market to use many confluence on the price movement. For example, if the market closes above here and the market gives us an opposite candle, we can use the Fibonacci because of this impulse. Also, we can have the confluence of this area here and this area here to help us to take our continuation trade. So if you're not familiar with the market, please, I really advise that you wait for the continuation. Let the market come back to proper structures, then you can trade the continuation. Now, another aspect that you can add on if you trade patterns, if you're a patterns trader, is this. For example, when I go back to the daily time frame, actually I can draw it even in weekly. You can clearly see that we do have these touches here of the market here, and also we do have the lower one here in case you do trade patterns or trend lines. We have this, and also you can have another one here inside here. Actually, this one I personally had it. If you saw from the beginning of the analysis that I was making, there is this one here, right? And also there is this one here. So what does this mean? This actually means that the market lost momentum while approaching this for the third touch. You can clearly see this was the third touch. We had the first touch, the second touch, and then on the third touch, the market gave us like a pattern, giving us actually like a higher low here. That's why we have been taking these buys on V75. So there are higher chances if the market starts trending upwards. We've already confirmed a trend upwards, but if it starts trending upwards, there are higher chances it may want to come and meet this trend line here, and then we can see what structure does next. Do not try to guess the market. Just trade with the flow of the market. Do not predict, just follow what the market is showing you, right? So these are the levels that we shall be watching, this area here and also this area for the beginning of the week. But the best is when the market closes above you, and then on a weekly retracement, then we continue with the market. We shall see on the change of trend. If there's no change of trend and there's a break instead on a retest, still we can be able to take our trade up to back down here, right? So those who have been waiting or want to trade with V75, we have actually been trading it privately, but this is what we are looking at with our setups. I hope this really helps you guys, and have a great time.